Alright guys, welcome back. Let's quickly update SPY SPX. So on Friday, pretty much closed at 412. And I just wanted to show on a daily chart what I'm looking from here. It's been pretty boring, very maybe exhausting for some people who are swing traders month so far, April. So opened somewhere at 409 and so far we haven't done much, slightly positive, and maybe even flat, if you just, depending where you got in, depending what you were watching, and depending what kind of trader you are, if you're trading options or shares. But from here, support for SPY 410, that's what I'm watching for, possible maybe move lower if it does crack below that, all the way to 406, and maybe even 50-day moving average, this yellow line on my chart. So if you can see, 50-day moving average has been pretty much moving sideways as well. You can see this yellow line for the past like 2 weeks. There's no trend, right? It's pretty much flat. So if it starts declining and if overall market starts declining, that's the support I'm watching. 402, 50, that's for SPY. Another thing is percent of stocks above their 50-day moving average, 100-day moving average, 200-day moving average. And you can see, I mean, this market is trying to go up with basically half of the market participating basically in that rally. So when overall market is trying to go higher on anything less than 70% of stocks, like basically if 70% of S&P 500 above their 200-day moving average, above their 50-day moving average, I could justify somehow to buy the dips and consider the dips basically being buyable. But after seeing internally that almost many names are not participating in this rally, it's hard to justify going long, and I have been pretty much sitting on sidelines. If you take a look at the year-to-date performance, you can see what stocks are doing well, and it's still, of course, Nasdaq is plus 20%, while S&P 500 is what, like 6-7% year-to-date, thanks to all of these names. Look at Nvidia alone year-to-date, probably the best performing stock, 85%. Okay, and large cap stocks like this, I mean, they're contributing a lot to S&P 500 because it's market cap weighted. Meta, you can look at the Facebook, 76% year to date. So anytime these names start pulling back, you're going to see a pullback in overall market. But last week, maybe let's go last month as well, what has been happening. You can see pretty much everything is green, but just take a look at the last week, or I maybe noticed a little bit of a rotation into defensive names, and people started maybe taking profit in some of the tech names because Tesla reported earnings, stock was down 10%, 11%, and largest names are about to report this coming week, such as Microsoft, Amazon. I mean, financials out of the way, somehow they cooled off with all that SVB situation, and healthcare names got pretty much hit as well this week, past week, and some energy names. So if the weakness continues in these names and people start rotating back into defensive names, I would be careful with the tech names because they can pull back more. And it hasn't even started like big of a pullback because a lot of names are still at the top. So, but if somehow next week we have a lot of data as well, earnings are great and market likes it, well, resistance levels would be somewhere around 415 for SPY and 418. So above that, I'll be watching for 420 and possibly maybe even 430 for SPY. Because ultra short term, if you take a look at the moving averages, such as like 20-day moving average, I mean, it's in an uptrend. But if you take a look at the 5-day moving average, same thing. I mean, but we're, for the past 2-3 days, we have been below 5-day moving average, but you can see this blue line on my chart clearly. So far it's in an uptrend. So, but we'll see what happens. These are the levels to watch for SPX. And also, one more thing I wanted to mention is SPX put to call ratio. Throughout that chop that we had in April, basically the whole April, you can see put to call ratio in SPX. It was pretty high throughout the April, basically. Anytime it ticks more than 1.4, you can see pretty much 90% of all of these days it traded. People were positioning to the downside. People were buying maybe insurance, I don't know, but the fact that many times I have seen this type of a flow, market can usually pull back like anywhere like from 4% to like 6-7% after seeing this type of a put positioning. So a lot of people have been buying puts more than calls. And also, if you take a look at the VIX, I mean, it's hitting lows after this SIVB situation, and it's sitting at the support. I don't think that we're gonna go below 16, but if it does, well, we might have pretty calm summer, because May historically a little bit volatile, and also end of April is volatile as well. So this coming week, you gotta be a little bit careful. If VIX starts ticking higher, maybe above 18, above 20, well, that means people will start panicking a little bit and running to buy insurance again, puts again. So, but these are the levels I'm watching. These are the things I'm watching. Thanks for watching. See you in the next one.